So I'm going to read out some numbers. You know them already. But for the first quarter, we're talking about adjusted EPS of $2.89, beating the estimate of about $2.80. Revenue coming in at $6.47 billion. The estimate had been below that as well. So beating across some key metrics there. Where did that strength come from, that surprise to the upside?
Yeah, thanks, Katie. I was very pleased with the start to the year. We really had an excellent start, both top line and bottom line. You know, you mentioned some of the high-level data. And, you know, to me, I think the strength was across the board. We had excellent growth in our consulting businesses when some others have been reporting some challenges. And then on the risk side of our business, demand is quite strong. And while the macro environment has a great degree of uncertainty and complexity to it, right now it's driving strong demand for our services.
I do want to talk about margins a little bit, because if you were looking for something to pick at, you could point to adjusted operating margin coming in at 32%. That was just below the estimate of about 32.2%. You really have a long history of annual margin expansion. Can you explain what levers you have to pull right now when it comes to margins? As we were just talking with our first guest, margins really the focus for this earnings season.
For sure, for sure. Although I think our growth really exceeded expectations as well. We're very proud of our track record, 16 consecutive years of margin expansion. We've guided to further margin expansion here in 2024. You know, we had a bit of a slower start to the year. It was expected for us. You know, there's some year-over-year headwinds, but we expect margin expansion to build throughout the year. So it'll be another good year of solid margin expansion for us.
Can you go into what potential levers you do have, though? Because when it comes to a retailer, for example, I think everyone knows how you can boost margins there. But when it comes to your business, insurance brokerage, what can you do?
Well, there's a number of things. We have ongoing workflow and automation efforts happening in each of our 4 businesses: Marsh, Mercer, Oliver Wyman, and Guy Carpenter. We're also looking for value and creating efficiencies at the intersections of our businesses as well. So those are important levers for us. And of course, we're leaning in and experimenting in a big way around AI. And, you know, that's more down the road. I don't expect impact in 2024 and maybe not even 2025, but those are all levers for us. And so we see a fair amount of opportunity for further margin expansion.
Well, you brought up AI, so we have to talk more about AI. Yeah. How do you see AI fitting into your portfolio of about 4 companies?
We've used various AI tools for a number of years, and candidly, with mixed levels of success. We probably had more success in contact centers, call centers around the world with prior evolutions of technology than we have in some other experimentation around data ingestion, policy review, as you might expect. But we're quite excited about the possibilities around the large language models. We've created a safe environment inside of the company to test and protect data, and our colleagues are excited about it. We have 50,000 colleagues that are now testing AI. We've encouraged them to test. We're aligning around a number of use cases that, you know, have some level of potential to scale. So I'm reasonably certain it'll make us faster. I've got a lot of optimism around will it make us more efficient? You know, I think the bigger question ultimately is, does it make us smarter? I mean, can we use some of these tools against our data sets and provide even better insights to our clients than we have in the past?
So it sounds like you're in pretty early stages of a lot of those questions. I mean, do you have any thoughts about timeframes over what timeline this could actually be a benefit to you?
It's a great question. As I said, I don't expect it to deliver much value to our shareholders in 2024. So I think we're a couple of years out before, you know, we have scaled use cases that, you know, will really drive meaningful value.
I do want to talk about the stock performance a little bit. You and I were talking about it before the segment started, because I was taking a look at your stock over the past 5 years and was shocked to see it's up 130%. And really, your entire group has performed really solidly, outperforming the S&P 500 over that time frame, as you can see on the chart there. How confident are you that you know, the group as a whole will continue to outperform, or would you use this opportunity to maybe set expectations?
Well, I think because of that track record, expectations are high, and, you know, it makes today, you know, particularly pleasing. You know, we got off to such a terrific start to the year. We're a resilient business, and we're fundamental to the economy. Probably a little underappreciated in terms of how important we are to economic stability, economic growth, really around the world. So, we've got a track record of performing across cycles. Obviously we've seen some downtimes. The economic challenges connected to the pandemic is a recent example of it. But we have an operating model that, we have a lot of confidence in. And what I would say to you today is with the macro risk issues, geopolitical risk, economic related risk, technology, including cyber. We didn't talk about cyber risk, climate, just the frequency and severity of climate events, all driving, challenges for our clients. And so, and what I would say to you is that coming out of the pandemic, and maybe with, two wars, major wars happening in the world, and some of the supply chain stress that we've all been living through over the course of the last several years, our clients are more risk aware than they've been in the past. And they're trying to find a better balance between efficiency and resilience. And that's leading to greater demand.
What do you think is at the top of the worry list right now? Because you just listed off a whole bunch of concerns.
Well, I heard yesterday you used the wall of worry line, and I think that's quite apt, for sure. But in my conversations with CEOs and in talking to our colleagues who are in front of our clients all day long, it's geopolitical risk, right? There's some major geopolitical risk. And on that list of the wall of worries, those are all risks that business leaders have been confronting, for a long time. But they're all at an elevated level now, right? And so that leads to a complexity of this moment that I think sets it apart.
And before I let you go, I do want to talk a little bit about M&A, because a competitor of yours, Aon, recently made a large acquisition in the middle market brokerage space. Recently, of course, Marsh Agency is your middle market business. You completed some acquisitions there as well. Do you see more M&A in your future? It's
been an important value creator for us. We've been building out our middle market platform for 15 years. We've stitched together the best regional agencies across the United States. And so we're very, very excited about our positioning in the middle market in the U.S. and more broadly around the world. We can bring scale benefits to that segment of the market and make what have been terrific businesses that we bought even better. And that will continue to be a focus for us.